This session we are continuing our discussion on hedge funds. Let's understand some of the fee and return calculations for hedge fund. Star Money is a hedge fund with $200 million of initial capital. In the first year, Star registers 25% return. Star charges a 2% management fee based on assets under management at the year end and 20% performance incentive fee. The assumption is that management fees are calculated using end of the period values. The first question: calculate fees earned by Star if incentive and management fees are calculated independently. Also calculate the investor's effective return. Calculate fees earned by Star assuming the incentive fee is calculated based on return of net of management fees. And what is an investor's net return given this change in the fee structure? And third question: assuming that incentive fee is based on returns in excess of a hurdle rate of 5%, calculate the fees earned by Star assuming the performance fee is net of management fee. What is the investor's net return in such a case? So the solution goes like this. The first part of the question asks us to calculate the normal management fee. Now, as you can see, the question tells us that the base management fee is 2% of the fund value at the end of the period. So at year end 1, the value of the fund is $250 million multiplied by 2%, that is the rate for the management fee. That gives us the fee of $5 million for management fee. Then we calculate the incentive fee. The incentive fee is calculated on the returns earned in the year 1 multiplied by the 20%. So we know that the fund value at the end of the year 1 is $250 million and the initial investment is $200 million, which means the return is $50 million multiplied by 20%. That gives us $10 million of incentive fee. So the total fees to Star Money is 5 plus 10, that is $15 million. And the investor's return in this case is the fund value of $250 million minus the total fees paid, that is $15 million, and minus the initial investment $200 million, or an investment of $200 million, that is 17.5%. Pretty straightforward calculation this. The next question asks us to calculate the incentive fee where there is a net of management fee structure return calculation. So in this case, the management fee remains the same, $250 million, that is the end of the period fund value multiplied by 2%. That gives us $5 million as management fee. And in this case, the incentive fee is calculated net of management fee, which means the returns of $50 million are reduced by $5 million, which are paid as base management fee, and that is the effective return. So $45 million multiplied by 20%, that gives us $9 million as incentive fee. So in this case, the total fees to Star Money is reduced to $14 million. And the investor's return in this case is slightly increased, that is at 18%, because of the lower incentive fee by $1 million.